breaks or get on your earbuds or anything like that, so maybe we can just kind of enjoy this time. We've probably got about 45 minutes or so.
As much, or is it?
If I sit up here and talk for 45 minutes, you will go to sleep, you will be bored. So let's make it interactive. If I don't have anything prepared, I'm just going off the cuff here. Tell you a little bit about my career and how I got into finance. Ms. Simon said I am a Chief Credit Officer, Risk Officer at Southern States Bank. And I'll tell you a little bit about that later on, but I did graduate in finance, and I was driving on the way up here today, and it occurred to me that I was here at Jack State 44 years ago for my freshman class. 44 years, and it blew me away because it just goes by so very fast. So first of all, enjoy your time. I mean, college is one of the greatest experiences that you will ever have. Once you get your degree, get out there and get in the real world, going to work, you end up like me and working 8-10 hours a day, 5 days a week. I will bet you there's probably some of you, this is probably your last class for today, maybe. So this is it. You got the rest of the afternoon off. I get to go back to work. So enjoy your time. Yeah, y'all come on in. I grew up in a little town called Aniana, Alabama, Blount County. Is anybody from Blount County?
Oh.
Are you really? Where'd you go to school? I did too. 44 years ago. That's a long time. I'm surprised we don't have any more students here from Blount County, but that's where I grew up. One of the things I did when I was in high school, one of the jobs I had was to haul hay in the summertime. And what you see these days, you see these big, huge, round bales of hay, right? And it's one guy on a tractor, and he moves it around wherever he wants to. Back when I was in school, they didn't do that. They made these what they call square bales, and these bales weighed about 50, 60 pounds apiece, and there was two guys on the ground and one guy on a flatbed truck and another guy driving the truck. And so the truck would drive right between the rows, and everybody would pick up a 50-pound bale of hay, chunk it up on the top of the truck, and then when you get the truck full, you'd take it to the barn. That's all. It's great exercise, but it is miserable. It's horrible, hard work. And at the end of my 4 hours, 5 hours, however long it was, first of all, I was exhausted. Secondly, minimum wage was like $2 an hour, so the guy gave me a check for $10 and said, thank you. And I'm like, good God, $10 for this. So I took my check and I went to the bank to cash my check, and I walked in and I said, that's what I want to do. Sitting right there on that desk in this air conditioning is where I want to be, because I knew the hayfield was not where I wanted to be, because it was just too hard work. So anyway, decided to come up here to Jack State, came a freshman year, and a bunch of my buddies, they all decided to transfer to Tuscaloosa, and so that's what I did too. So I just basically followed them down there. But I always knew I wanted to be in business, and I saw a lot of hands before about business students. One more time, everybody in business. So most everybody, right? Mm-hmm. Okay, how many of you know what you want to do? You already know, what do you want to do?
I want to be a pastor.
Hey, you're in business school, you're going to be a preacher. Okay, well great. What about you?
I want to get into investment banking.
I like that. So there's a few of you that know, and the rest of you are probably coming up here, they know you want to go to school, you want to get a degree, but you really don't know what you want to do. And I can relate to that, because I didn't either. I had no idea. I knew I wanted to be in business, and that was about it. Even though I walked in the bank that time, I wasn't sure about banking, so I came up here and I just started taking my core classes. And, accounting was one of them, finance, economics, marketing, took all that stuff. And I thought I wanted to get into accounting and be a CPA. Well, the first class, they started with these T accounts and debits and credits, and I'm like, I don't even know what you're talking about. I have no clue about all that stuff. And it just never kind of resonated with me. And so I had always been interested in money. I'd always been interested in time value money, investments, how you can make more money by investing money. And that had just always kind of been, an interest to me. So when I got into my finance classes and started learning about the stock market, that kind of resonated with me. Now, there was no great event that said, go into finance. It it just happened. I think some of us, you know, are just born a certain way with certain interests, and that's all great. And I had that interest for finance. So fast forward, graduated from school, and I took a job. My first job was in 1984 at that very bank that I walked in and cashed my check. A little small community bank, First Citizens Bank in Aniana. 1984, you probably don't remember, but there was a pretty good recession going on, and so the jobs were not very plentiful, but I was glad to have it. I was making $15,000 a year, and I had insurance, and that's really all that mattered. But what I did was that I was in charge of buying pencils and paper and toilet paper and any kind of supplies that the bank needed, debits and credit tickets, all that kind of stuff that you back then used to run a bank. My point in telling you that is that it was probably below my skill set. I did have a degree in finance, and there I was buying pencils and papers that anybody could do, but it was an opportunity. And that opportunity got me in the door with that bank, and I started at the ground up. And there's one thing that I would like to tell all of you, that when you get out there and start looking for your career, your job, I think one of the most important things you can do is learn that business, whatever it is, from the ground up. Start at the very bottom. Don't ever look at anything and say, well, that's beyond me. I'm way too good for that. I would encourage you not to do that. We were talking earlier about how you came out with your degree and went to work or tried to get a job as a teller. Well, I had to move up to teller my second year, and so I got promoted to teller. And then I got promoted up to what they call a proof clerk. Now, how many of you know what a proof machine is? I didn't think so. How many of you know what a check? So y'all got a checking account. Most of you use your debit cards, I'm sure. But in those days, debit cards didn't exist, and there was a check. Well, a proof machine is the machine that somebody actually physically keys in the dollar amount that you write on your check. And it puts a magnetic code on the bottom so that the computer can read what the amount is, and it will tell also where that check needs to go back to, what bank it needs to go back to. So I got to move up to that. Right after that, our little bank was sold to First Alabama Bank. And First Alabama, which is now Regions Bank, bought this little bank, and I got an opportunity to move from there to Birmingham and get into the credit department. So finally, I'm in a job where I was somewhat trained, to go to work in. So I started learning about credit and underwriting loans and risk rating loans and things of that nature, which I still use to this day. But if I hadn't taken that job in supplies, it never would have led to me getting to that position. Back in those days, a bank was a fairly simple thing. You either worked on two sides of the bank. You either worked on the deposit side, where you collect people's money, checks, CDs, money market accounts, things of that nature, or you worked on the loan side, and that's where you give away the money and hope they give it back to you with a little bit more. You take collateral, all those kind of things. The banks were pretty simple. It was two sides. But that has truly changed over the last 40 years or so, and in the last 10 to 15 years, it has changed dramatically. So a bank, these days, you still have the same basic taking deposits and making loans. What has changed is the amount of government regulation is one thing, whereas we have an entire department now called the compliance department. So if any of you have any interest in going into maybe getting your law degree, after you finish your undergrad, maybe you might want to be a lawyer. And the compliance department is about the law. It's about complying with government regulation, and there are a lot of them. There's fair lending, truth in savings, just tons of regulations that we have to abide by. And back when I first started, kind of everybody did that, but now we've got an entire department, and that's all they do. They check us for compliance and making sure we stay within the letter of the law. And if you don't, the FDIC is going to come in and slap your hand and maybe fine you and things of that nature. The other thing that has dramatically changed is crime. used to, a big risk in the banking business was somebody coming in and going to a teller window with a gun and saying, give me all your money. And we train for that, just train all the time, what do you do in case of a robbery? And just for your interest, I don't know if you're interested, we are trained to give them exactly what they ask for and try to get them out the door as quick as possible, and then you lock the door and call the police. You don't want to get anybody hurt. These days, for somebody to come in and do that is pretty unusual, because you're gonna stand a teller's gonna have maybe $10,000 in their drawer at most. Most of the time, they don't even have that. So you might get away with that, nobody gets away with it, but what's happening these days is cyber, computers, crimes. We have dealt with several $1 million worth of losses, just our bank alone, through fraudulent wires, through checks, people, making a copy of a check and going and cashing it, and it's not theirs to begin with. And so one recent event that we had that you might find interesting is we lost, it was north of $1 million. It was a wire transfer. And what happened was somebody from Russia, I think, or China, it might have been China, hacked into one of our customers' computers, and they sat there and watched the email traffic go back and forth between them and our bank. And so they kind of got familiar with everybody's names, they knew how they transferred money, they knew how to, what they were doing, they knew their names. And so when they decided to act, they got into their computer and sent an email to our bank and instructed us to wire this money up to Michigan somewhere, and then it went somewhere else. It's happened two different times. One was 700,000, the other was 400,000. And there was part of our employees that didn't follow the procedures exactly like they should have, but these people are extremely smart. I mean, they know what they're doing and how to do it. They're watching you through the computer. And so we wired that money and it's gone. We don't have it back. There was that one little procedure that we didn't follow, and so our insurance company didn't pay, so we're out that money. And that's another big thing that has changed in the finance industry across the way, mostly with banks. And so if you have an interest in criminal justice, things of that nature, you have an opportunity in banks. So we have one person, that's all she does all day long is follow up with fraudulent checks, cybercrime. It just goes on and on and on. So the point being, there's a lot of things, just because you get a finance degree, there's opportunity in the deposits and loans, but there's also other opportunities elsewhere. There's opportunities if anybody's interested in an accounting degree. Real quick, my daughter went to Alabama also, and she got her CPA, and then she was working for an accounting firm that did bank audit work, and so she'd travel around and do audits for banks. And there's a lot of travel involved. She made good money at it, but then she decided to start a family, and when she did that, the travel didn't work out. So she's working at a bank now. She got a job at First Bank of Alabama in Talladega, and she is the controller. And so there's another area in banking that might be of interest to somebody, that you have a CPA degree. So somebody in the bank's got to pay the bills, they've got to reconcile, they've got to do audit work, they've got to do all those kind of things that apply to an accounting degree. So just lots and lots of opportunity in the banking business. Somebody mentioned investment banking. That's another area that's fairly new. It's been around a while, but when I was in school, there was no degree for it. We just had banking and finance, and you either went industrial or you went the banking side. Well, now they've got a degree for that, and basically what that kind of person does in their job is that they put different companies together, buying and selling. We just bought a bank. We closed the deal August 1st, Century Bank in Cartersville, Georgia. It took about 2 years. And so you have, like, the president of each bank will get together and start talking, hey, you interested in selling, you interested in buying? Yeah, I might be, and so you start back and forth. And then does it fit? Does your culture fit in with our culture? Does your market fit with our market? And so you've got an investment banker that's representing those parties. And it doesn't have to be a bank, it can be a business too. There's manufacturing businesses that's bought and sold all the time. And so you've got, this investment banker that will put these two parties together, and they will look at what the deal looks like. And so once you get two people that's interested in buying and selling, then you run a model and you say, okay, this is your balance sheet, income statement, this is yours, this is what it looks like, this is what y'all look like combined. And basically what you're doing is, and it sounds kind of harsh, but it's reality. When you put these two banks together, now all of a sudden you've got some people that are doing the same thing. Well, you can generate the same amount of revenue, the same amount of income, but with less people. And those are what you'd call cost savings. So, for example, my position as a credit officer, you don't need two of them. With a combined bank, you just need one, so you get rid of one. You don't need two CFOs. You get rid of one of them. You don't need two operations departments. So you lose a lot of those people. And those are cost saves, and what you do, you put the two things together. Well, that's what an investment banker does. He runs those models, he puts these people together, and sometimes they make a lot of money, most of the time it's commission based, and if you're not putting deals together, you're not making any money. You might have a small base pay, but they really make their money when they put a deal together and they get a commission on the sale. So those are the kind of, another area that would be, might be of interest to you, and that's, in investment banking, you really get more into the accounting side. There's a lot of accounting involved in that because you want to run models and projections of what those two businesses look like combined and how much money they'll make as a combined entity, and how long will it take to, because there's cost involved in it, how long will it take you to get back, because, and I don't want to get into all this because it's beyond what we can talk about, but each bank's going to have stockholders, right? So everybody understands that a bank is owned. You have the stockholder just like any other business. Well, when you put the two together, you create what's called dilution. So if I've got a piece of pie and there's 10 of us sharing that piece of pie, well, now all of a sudden we've got the same piece of pie, but there's 20 of us sharing it. So your ownership is diluted. But there comes a point in time in your projections where that piece of pie will grow and everybody gets back to the same percentage ownership that you had before. And so that's called your earn-out period. And you want to, maybe keep that less than 3 years or so, 3 to 4 years. So don't want to get into too much of that. But listen, I've been talking a lot. Does anybody have any questions or comments? I don't want to sit up here and talk for 45 minutes. But is there anything that, yes, ma'am?
The job that your daughter has, what exactly was that for?
She's a controller. And there's all businesses have controllers. It's an accounting type deal, and they make sure the bills are paid, they make sure the people are paid, they deal with payroll, they deal with reconciliations of accounts, things like that. So it's all accounting based.
And she's able to travel with that?
She doesn't have to. The job that she had before was with an audit firm, an accounting firm, and that she had to travel previously to go audit banks' books. And so, like a bank will have an auditor that prepares financial statements to give to the stockholders to say, okay, this is how much money we made this year. And so you got your financial statement. And she did that kind of work before, which required travel. But now that she's in this one bank, she doesn't have to travel. She's at home every month.
Listen right there.
Maddie.
Yep.
So she still does the same audit work, but like at one bank?
Yep. Yep. Some people, you've got internal audit, you've got external audit. So an external auditor, she worked for Malden and Jenkins, and they provide an opinion of the financial statements. And you'll learn that about in your accounting classes too, that when an accountant goes in and says, okay, these are the financial statements, this is what the assets, liabilities, the income and expense looks like, and this is how much money you made. Well, that report goes to the shareholders, because ultimately that income goes back in the form of dividends, or growth in the entity. And so you're reporting back to your stockholders how much money you made. Well, that carries liability because they are stating what we looked at is the truth. This is how much money the entity made. And so she would have to get an opinion. There are different types of opinions in the accounting world, but when you work internally, you're doing more work inside the bank. You may be looking at, reconciliations to make sure some of your employees are not stealing money.
So internal is more of like the inside working
Yep.
of a bank.
Yes, internal. And then you got external, like your Malden and Jenkins, people like that are accounting firms, that do the external work. And they, in our bank, our external, they come around maybe 3 or 4 times a year. And they get in there and look at all our stuff. Good question. Anybody else?
So so you say you work with credit.
I do.
Tell the students how credit works.
Okay. Credit is basically just what you do when you want to borrow money. Has anybody borrowed money to buy a car? Because some of you involved, you're just now getting to the age where you can legally sign a document, which in the state of Alabama, I think is 18 or 19. So credit is just where you want to borrow some money. It could be for a car, it could be for your business, it could be for a boat, it could be whatever. And so what I did when I first started out, First Alabama and ultimately Regions, I worked in the area where the businesses, a lot of business customers borrowed money. So if you think about a manufacturer that's making widgets or making whatever they make, they gotta have a piece of machinery in order to make that. They've gotta have a building, they've gotta have employees, they've gotta have all the things it takes to produce whatever it is they're producing, which is another cool thing about working in the bank and credit, is that you get to experience and look at a lot of different types of businesses. So let's just say, for example, and I'll give you a good example here, because this is one thing I'm going through right now. Lee Brass is a foundry in Oxford, Anniston, Oxford. So what they did was they made flanges and nuts and bolts, and a lot of it was used in sewer projects, a lot of it used in the military and big battleships and things like that. Well, we made a loan on that equipment, the furnace, the grinders, the threaders, all that kind of stuff that made these parts. And so we made an equipment loan. Well, part of what I did early on was look at those financial statements, and that's where I really learned about accounting. I didn't really learn, I was never a really good book student. I couldn't read a textbook and take a test. I did it well enough to pass, but it never really kind of sunk in what it meant until I started in the credit area and was able to look at those financial statements. And so you look at the financial statement and say, okay, this company, they manufactured this, their revenues for the year are this, their expenses are X, and they're left over with this. Then I look at the loan. Okay, you want to borrow $5 million, the payment on that is going to be $10,000 a month, whatever it is. Can you afford to pay me back? And you get in there and you start analyzing their cash flows based on those financial statements to see if they have the ability to pay you back. Now, the same thing's gonna happen to all of you when you get out, you go borrow money to buy a house or a car. A banker somewhere is going to look at your income, going to look at your expenses, and they're going to say, okay, well, can you afford to pay me back for this car that you want to buy? And that's all they're doing. And that's all we did. That's all we do now. I'm over a group of young people. There's probably 20 that work in our credit area in Birmingham, and they're all, in their 20s and 30s, pretty fresh out of school, and that's what they do every day. We get a loan request, we send it over to those guys, they do what you call a spread, which is basically putting financial information over a long period of time, 5 years worth of revenues, 5 years worth of expenses, 5 years worth of income. And can you afford to pay me back based on your amortization schedule, what your payment is, what your interest rate is, and if, they will give the thumbs up, yep, they can pay it back. So then we make the loan, then you get into analyzing it over time to make sure they can continue to pay you back. And if they can't, you go out there and you get your stuff. And so, kind of finish up the Lee Brass, and I hope I'm not sharing any secret information here, but a lot of this has been in the newspaper, well, not news, but on social media, about how we shut down Lee Brass. And there's a lot more to it. That's what the article said, and I guess technically we sort of did. But we didn't do it just because we wanted to. We did it because they weren't paying us back. And so we went and got our stuff. And so, unfortunately, a lot of people lost their job out there, but we're working right now to find somebody else to go in that business and hopefully get it running again. So those are the kind of things that didn't make the newspaper. It didn't make social media. So we look like the bad guys, but quite frankly, it was the owners that did it, and we tried everything we could to keep from doing it. But that's what the credit area does. And so you're basically looking, whether it be an individual or a business, as to whether you can pay back the money that you want to borrow. And again, that's another cool thing about it. One day you might be looking at a manufacturer, the next day you might be looking at a doctor's office. We've made loans to hospitals. We made one loan to a guy that I had to repossess it, but it was a mobile MRI unit. And this thing was a tractor trailer thing, probably as big as these screens right here. And inside it had an MRI machine. And what he wanted to do was to put one of these in every town where there was an NFL team, so that your retired NFL players could go to this mobile MRI unit and see if they got head injuries. And then ultimately, they would probably try to get with the NFL to kind of get some money back for medical reasons. Well, he ended up being a fraud. He did buy the machine, but he had changed his name, did a lot of things, and we just basically got taken. And our mobile MRI ended up down in Louisiana somewhere, and I had to go down there and repossess it and bring it back. So I did have experience in that. Another cool thing, I'm on the credit side, and you're dealing with the good customers that pay you back and will do anything to pay you back. And if they can't, they'll come talk to you, and you as the banker kind of work out a situation to help them pay you back. But some people just set out to get you. And if somebody sets out to get you, they're gonna get you.
Yeah.
And they got us. And so we went down there, I repossessed his mobile MRI, and the very same year I repossessed another guy's jet. That was fun. It's very, very interesting work.
Brent?
Either one.
Have you ever had to track down somebody who essentially went rogue?
I did, yeah.
What was that like?
The internet is a wonderful thing. It is a wonderful thing. You start, the guy that owned that mobile MRI unit, he just disappeared off the face of the planet. And we never did find him. He had changed his name. He had married a lady that he met online and made her sign everything, and basically said, I'm into some kind of something or other, and I can't sign, so she's gonna sign on my behalf, and he just left her holding the bag. We knew where she was, but he disappeared. He ended up somewhere down in Florida. So it's you get to play a little detective. The internet is an interesting thing.
What do you do with possessions after you retake them back from those people?
Sell
You just sell them?
You sell best you can, and it's interesting to think. All this machinery at Lee Brass. What am I going to do? With a bunch of equipment that pours brass, a furnace that you take molten brass and pour it into a form. And you get out there on the internet, do a few searches, you find somebody else that's in that business, and all of a sudden they start finding us. And so we've got a group coming down in a week and a half that owns a foundry in Pennsylvania.
Oh.
And they had heard about Lee Brass because they were one of the customers of Lee Brass, and now they're interested in buying.
Wow.
So
That's good.
Yeah.
it'll all work out, but that's basically what you do. You just go out there and sell it. If it's an automobile, you just advertise it, sell it on the open market. You see some banks that they'll put their repossessed vehicles in their parking lot with a for sale sign on there. You can go down to Sycamore. I go through Sycamore all the time on my way to Silicaga with that little credit union that's right there. It's not Rockford. What's the little town?
Sycamore?
Sycamore.
Yeah.
That little credit union right there has always got pickup trucks and campers in their parking lot with a for sale sign on it, and it's repossessions.
Right.
And that's the way they do that.
Nolan, I think, has a question.
Yes, sir.
So you said you started like buying papers insurances. What was your like path to get where you were today?
I'm glad you asked that, because I meant to talk about that. When I started with Regions, I moved to Birmingham and worked there in the credit area for like 5 years. And I got to the point where I wanted to go out and actually make the loan. In the credit area, you never see a customer. You just see their paper and you do the analysis and decide, if they can afford to pay you back. Well, I was ready to move on up, and I wanted to become a lender, a commercial loan officer. So a job came open here, not here in Jacksonville, but in Anniston. And I had never been to Anniston before outside of, my time here at Jack State, and I decided to take the job. Now, that was still with First Alabama, or Regions at the time. It was just a different branch. And so I took that job. And from 1991 through 2005, I worked at that bank and just worked my way up, stayed there. Now, one thing that I see out there, because we hire a lot of people, but one thing I see, and I don't know whether to tell you to discourage this or not, but there's a trend out there that there's a lot of people that change jobs a lot. Some every 2 to 3 years. You got to be really careful about that, because if somebody looks at your resume and you've changed jobs 5 times in the last 5 years, somebody's gonna say, he's gonna stay with me a year and then he's gonna leave me. I'm gonna invest all this time in training and then he's gonna leave me. And so you gotta be careful about that. I'm not saying that you shouldn't, take advantage of an opportunity, and stay with the same company forever, because I've had 2 jobs. I worked for First Alabama, they changed their name to Regions, and then in 2005, 2 things happened. One, AmSouth, I don't know if y'all remember that name, but the old AmSouth Bank, big bank, good bank, and Regions merged. They had an investment banker, they put the 2 banks together, and all of a sudden, you got duplication of services and your cost saves, and I was the county president for Calhoun and Talladega County at the time. Well, during that process, I found out that I had lost my position. Now, I didn't lose my job, but I lost that position. They wanted me to come back and just be a commercial lender, which would have been fine. Well, it's not gonna be a pay cut. And the second thing that happened was a good friend of mine had left Colonial Bank and decided to start a bank. And he called me and said, I need a credit officer. I want you to come work for me. And I thought, okay, there's 2 things going on here. And, the good Lord looks out for fools like me, and that was a sign. And that was the only time I've ever quit a job. And I just didn't feel like they wanted me there, because they brought in their guy from the AmSouth side up. They brought somebody up from Tuscaloosa to take the job I had. And he was a nice guy, but I just felt like I needed to move on. And that's when I left. And there was maybe, there's probably 10 or 12 of us that got together and we started a bank from scratch. Now, that's another thing that's going on in the banking industry right now that used to happen all the time, and now it doesn't happen very much at all. And that's starting a bank. We got together and we raised $30 million in capital. We were calling friends and family, hey, would you like to invest in our bank? Would you like to buy some stock? And we were selling stock. That's the first thing I did for 2 years, call everybody I know, would you like to invest in this bank? And then you become a stockholder. And so we raised $30 million and started in Birmingham, Calhoun County, and in Auburn, Opelika. And that's where we started, 3 branches. We were in a little trailer. And that was in 2006, 2007. So that was really, really cool to be able to do that. The reason that you don't see that much anymore, again, going back to the compliance area, compliance has got an expense associated with it. I mentioned that we've got 5 people and that's all they do. and you gotta have them. You got to abide by the laws. But the thing that happens is that those 5 people are expensive people and they don't provide any revenue to the bank. So you just got a raw expense out there that you're having to pay. And so the cost to start a bank these days is so high that it will take you years to get to the point where you're profitable. It took us 3 years of making loans, taking deposits, and growing to the point where we got profitable, and it took us another 2 years to make up for the losses that we had the first 3. So that's what you call cumulative profitability, and we've just kind of taken off ever since. But I think there's been one charter that's been issued in the state of Alabama in the last 4 or 5 years. Another interesting thing that's going on in the industry, I would say maybe 10 to 12, 15 years ago, there was 15,000 banks in this country, over 15,000. Now there's about 4,500. So the number of banks are getting smaller, but the size of the banks are getting bigger. So you've got a lot of M&A, mergers and acquisitions activity going on. Big banks are getting together. They realize that you've got to have some scale in order to make more money. And so banks are consolidating. I think the government likes that. I'm not much of a conspiracy theorist, but I think that there's so much regulation out there that they would much rather regulate 4,000 banks than they had 15,000. So that's another thing going on in the industry. Another cool thing I got to do in 2020, we had grown to that point to be, I want to say we had grown to $1 billion in total assets. 8 locations, 10 locations, something like that. So we had some really good growth. But we decided to take the company public. Now, who knows what that means? The investment banker should know. So you take what was a private company. Remember I called friends, family, hey, would you like to buy some stock? Yes, okay, I'll buy some stock. Well, let's just say my mom wanted to buy some stock, which she did. It's not like if she decides that she doesn't want that stock anymore, she can just go to the New York Stock Exchange or the NASDAQ and sell it, because it's a private company. It's not out there. In order to sell that stock, she would have to say, hey, Greg, would you buy my stock? Okay, what price? And you go back and forth. You have to find another individual that's willing to buy your shares, and that's what you call a private company. Most of your businesses these days are going to be private. They're privately held by individuals. Those that are not are public. And so we decided to take the bank public, and there's a couple reasons for that. It gives you some advantages. Because first of all, your stockholders can then go to the NASDAQ and just call the broker up and say, I want to sell my shares, and it's done, for the most part. The other thing that it provides you is that when you decide you want to go buy another bank, a lot of times when you say, okay, well, I'm not gonna pay you $20 million in cash, I'll give you $20 million worth of our stock. And then instead of, my bank having to come up with $20 million, we just give them stock. Well, if you're being acquired, that's attractive to you, because then if you really want to get your money back and turn that stock into cash, you can sell your bank for stock, but then if you're publicly traded, you can go sell it on the market. So you're not restricted in getting your money back or trading it for a different kind of stock or doing something else like that. So that was pretty cool that we got to do that in 2019. We did take the company public. There's a handful of us that got to go up to New York and ring the bell and the confetti and all that kind of stuff. And then we went upstairs and had some champagne, and we said, okay, we're about to go. And you're sitting there looking at these computers, and all of a sudden your name pops up there, and now you're trading. And it was a really cool moment, really, really cool time. But those are two things that may be unique to me, because again, people are not starting banks. It's pretty unusual to take a bank public these days. So I was very, very proud to be able to be part of that.
Yeah, gives me chill bumps.
Well, it was really cool.
Yeah.
It was cool. Then that night when we got through, we got to go to the NASDAQ In New York City, it's probably a 50-story building, well, they've got, I found on about the 35th floor, they've got a little patio out there. And so we get to go out there and have dinner and have drinks and
Yeah.
cocktails and everything. It was really a neat moment, neat moment. Anybody else?
I have a question, if that's
Sure.
okay. So, Mr. Smith, you've gone from a purchaser at a small town, home-owned independent bank to a senior vice president at a publicly traded company. Do you have any, maybe more personalistic takeaways or advice that you could share with the students as far as just quality, personal quality, things they should be working towards or watch out for?
I don't know if watch out for is the right word, because a lot of times the mistakes you make are the best teachers that you'll ever have. But I think, one thing that was in my mind when I graduated is like, oh, I've arrived. Now I know something. Now I got my piece of paper and I can go get a job. And I can show my employer exactly what I know. Well, that absolutely is wrong. I mean, it's completely wrong. I think the one thing that I could tell you that I hope you take away from this is that the day you graduate and go to work is the day that you continue to learn. Don't ever, ever, ever stop learning. Because then you're in that job. What you need to do is continue to educate yourself. And I'll give you an example. About 10 years ago, our bank decided to get into the derivatives market. Now, I don't know if any of y'all know what derivatives are, but it's when you buy stock, you can short it, you can puts, calls, things of that nature. And it's pretty high up in finance. Well, I didn't know anything about that stuff. But we decided to do what they call interest rate swaps. And again, I'm getting a little bit deep in this, but basically, if the bank makes a loan, most people are going to want to fix the rate at the lowest rate they can. I want a low fixed rate. I don't want it to move. For a bank, that's not always a good thing, because what we're doing is we're taking money from somebody else and giving it to somebody, taking it from somebody that has it and giving it to somebody that needs it. Well, the money that we're borrowing, we have to pay interest on it. So money market, you're going to earn interest. We pay you on a CD. We pay, on those deposit accounts. And so that's what you call our cost of funds. And so we have to pay in order to get that money. But what we loan over here to the people that need it, we're charging more, right? So we're working off a spread. So that 3% spread is the way we make our money. And so it's just constant borrowing and lending and working off that spread. Well, if you've got somebody that borrows money at a fixed rate of 5 and it costs me 4%, interest rates move and the cost of that money goes up to 4, all of a sudden I'm not making any money anymore. And I don't like that. I like to make money. So what you're trying to do is match the money that you're paying to borrow money against what you're earning from the guy that you loaned it to. So an interest rate swap will basically get a derivative, a back-to-back interest rate swap, so that the money that we earn is a floating rate to the bank, but it's a fixed rate to that customer. And again, I don't want to get too deep in it, but the point being is that we had to learn how that worked. Nobody knew how it worked. We didn't know what the risk we were taking. We had to learn how to do that. I've been in banking for 30 years at that point in time. The point being, I learned it. I got a book. I talked to people. I learned how these things. I talked to other people that's in this business. So when you get out of school, don't ever think you're going to stop learning, because that's the point in time where you really start learning. That's where you get your education. Is when you get out there in that job. Now this institution here, when you get your piece of paper, those grades will get you in the door. But what's going to keep you in that door and help you move is hard work, learning, and continue to work. And don't think anything's, learn that. I would encourage you to learn any business that you decide to get into from the ground up. Then you appreciate those people that are the tellers, the people that are buying the supplies, the people that are doing those chores at the bottom, and you know what they're going through, you can appreciate that. So I would really encourage you to continue to learn, work hard. When everybody else is going home at 5 o'clock, you stay to 5:30, stay till 6. You show your employer that you have value. The other thing that you can do is show your employer that you can make money for them. Because if you can't make money for somebody, they don't need you, right? I'm gonna hire somebody that can make money for me, or make money for the organization, or make money for the bank. And so that's really, when you get right down to the meat of it, I need people that's gonna make me money. And I need you to learn, and I need you to work hard. So those are the kind of things that I would suggest, that you never stop learning. Never stop learning.
And I think that's valuable. I know we're talking about finance today, but regardless of your major, that's
It
going to
doesn't
be
matter your major.
sage
It doesn't
advice.
matter your business.
Sage advice.
We are all, and it doesn't really make any difference what business you get into, we're all salespeople. And the biggest thing that you've got to sell is yourself. You gotta go out there and present yourself and sell yourself to somebody and show your value. And I don't care what line of work you're in, you're gonna do that in the preaching world, in your church. You gotta sell yourself on your ability to lead that congregation. So everybody's selling, always.
Yes, sir. All right, any more questions from the audience?
Yes, sir.
Do you have like some internships and stuff?
Oh,
Great question.
yes.
Oh, got all that.
I was- it's on my
Thank you.
list.
Perfect. That's the other thing I was gonna talk about now. Amy can talk about the Southern States internship, because we do have one. We have a ability here, and I think it's probably gonna be your juniors and seniors. that
yes.
eligible.
So, but it's good to think about now. You need to become a junior status. So if you're looking at internships, they're open to all majors. We kind of talked on this this week in my class, but Southern States is actually a leader amongst employers and companies that we're working with, and they have established an endowed internship. So basically, every semester, fall and spring, they're looking for an intern. And we've talked about the value, right, and getting work experience, especially work experience in a field you think you might want to pursue. All right. Well, Southern States has created an amazing program and partnered with JSU, and we're so thankful for that, to where they hire an intern. And notice I said hire an intern every semester. They get paid $5,000, I believe.
I think so.
Now, my internship was incredibly valuable. I learned a lot. I got paid zero. I pretty much paid them to work there. So this is an amazing opportunity. And not only, I hate sitting. Not only is it an amazing opportunity for you to learn more about this industry, this field, whether it's someone in economics, it's open to business, I think all business majors, but they, really look at accounting, finance, economics. But it's an amazing chance to learn, is this something you want to do? Is it not? So it's an amazing learning opportunity. It's going to look great on your resume. It's a networking opportunity. It's going to open up doors you didn't even know were there. And you're lucky enough to have, a stipend to go along with it. So this is an incredible opportunity. But yes, you need to be a junior. So if you're a finance major, we want you to have completed at least Finance 301, Intro to Finance. If you were a management major applying for it, we want you to have at least, MGT 301. So things of that nature. But it's something definitely to look forward to. And they are a leader amongst employers here at JSU, partnering with our students in creating these ongoing internships. So yeah.
And
Great
whether you get paid or not,
No.
I mean, it's, and I remember sitting where you are and thinking, okay, well, I'm looking at this stuff in a book, but I don't know what I don't know, because what's in a book and taking a test is not the real world. You still look at books and all that kind of stuff when you do your job, but it's just a totally different experience. And so I can appreciate, how do I know what I don't know? How do I know that I want to be an accountant, or I don't want to be an accountant, or I don't want to go into finance or banking or whatever the case may be? How do you know? Well, the way you know is that you go out there and find an internship, and you go to work in one of those places, and I would think it would be valuable to you even if you didn't get paid. Because then you can see, oh, this is what they do. And you kind of get a feeling for, will I like this or not? And if you don't, then take another internship somewhere else. Go work for a law firm. Find an investment company. Now, there's one thing about the investment world that you need to be aware of. Most of those jobs are going to be in your large metro areas. You've got a lot of them in Atlanta, Chicago, New York, and if you want to work at a place like that, that's fine. I personally like my 8-minute drive to work every morning. Yeah, it is. And but that kind of job is going to be in a large metro area. There's not going to be any of those jobs here. But if you wanted to work in a bank, a community bank, we've got several really good banks here in town. We've got Noble Bank, Southern States, we've got Farmers and Merchants, good bank, so. Good question.
Any other questions? Oh, yeah, Jake.
Do you believe networking has like been the greatest asset to you over college and your career?
Yeah, I think so. I was having a conversation, I don't remember who it was with the other day, but they were talking about, what are you gonna do if you get rich, that sort of thing, who you gonna leave your money to? And, I'm not rich and I'm not gonna be, and that's okay. But, if you were, would you leave it to your kids so they would never have to go to work? Well, I think that would be the biggest mistake you would ever make, is to leave your kids enough money that they didn't have to go to work. You might do something like, okay, for every dollar you make or earn, I'll give you $1 on the other side out of the trust, or whatever the case may be. I think working and getting a job and a career is probably the most meaningful thing you'll do.
Okay. And I think Ayla.
Oh, yeah. You wanna go to
Oh, you can go first.
Okay. What do you have your interns doing?
That's a great question too. Our interns last time worked in the deposit area for checks and clearing checks and things like that. We come up basically with special projects. Last year, and how do I describe this? Our computer system had your name and your address is Greg Smith, 48 Drake Lane, Oxford, Alabama. It was all the same line code in the computer. And we really needed to separate that into your first name, one field, your last name, another field, your city and state in two separate fields on the computer, so we'd know, okay, we've got X number of people that are in Oxford, or our collateral is in Birmingham, or, separate that out from a computer standpoint, which is another opportunity in banking is statistics and computer programming. I mean, tons of opportunity for that. And so we had them come in and go through our entire customer list and separate out those names and addresses. Now, you're not going to, go straight into analyzing financial statements or anything like that, but you'll be exposed to it. It's just really difficult when you've only got a person for one semester to train them to the point where, they can do meaningful work. But what we're trying to do is twofold. It's giving you experience in the bank and seeing, how well you work. And when you graduate, the best opportunity for you to go get a permanent job is the people that you did an internship with.
Absolutely.
Because they're gonna see your work ethic, you're already a step ahead from somebody coming straight out, fresh out of college. So it will give you a tremendous, heads up in getting that first job, if that's what you want. But it basically tells you, gives you exposure to the industry.
Can I go to South State Bank to start a secure credit?
You sure can. You sure can. We're taking applications all the time.
With the secure credit on.
That'd be like borrowing money, right?
Oh,
Yeah.
so it's like I actually do borrow money, or do I have like deposit the money in there and use that said money?
No. What banking basically is at its core is there are people out there that have excess money, and most of them are, elderly people like me. I quit borrowing money a long time ago, because I don't need it in my house to pay for all that kind of stuff, but you young people are about to graduate, you don't wanna go buy a house, you don't wanna buy a car, all those kind of things, and you got no money. And so what a bank does is say, okay, we're gonna take deposits from those people that have excess money, and then we're gonna lend it to somebody else over here that wants to borrow money to buy something that they don't have the cash for. So it would kind of defeat the purpose if you could only borrow the money that you put in there. That's all you're gonna do, you might as well just keep your money and go buy whatever it is you want. So, but yeah, we do that.
All right, and if there are any more questions, we welcome them. However, I know, Mr. Smith, you thought you wouldn't take up all the time. I knew we had a great class, and we would. Did y'all learn something new? Let's show them our appreciation with a round of applause.